Quick note before we get started on the video, if you are interested in purchasing the future CFD's daily key levels V3.0 indicator, you can email us at daytradinggps@gmail.com to request a discount promo code to purchase lifetime access to the indicator. To purchase the indicator, go to daytradinggps.com. Hello, in today's video we'll be taking a look at two different charts. One is the Nasdaq 100 E-mini futures, and the other is going to be the S&P 500 ES E-mini futures. This is the Thursday, April 30th, 2026 trading session for both of those symbols. We'll be utilizing the Day Trading GPS Futures CFD's Daily Key Levels V3.0 indicator in conjunction with the Day Trading GPS Ribbon indicator for confirming our bullish and bearish entries. On Nasdaq E-mini, we have a total profit of $6,385 per E-mini contract on two different trades. And then on the ES S&P 500, we have a total profit of $2,975 per ES E-mini contract on two different trades as well. We'll start off with the Nasdaq chart. As you can see here, we are on a 1-minute chart. The recommended chart time frames are going to be between 1 minute and 5 minutes for the Nasdaq NQ E-mini and the ES S&P 500 E-mini. You can utilize a 2-minute contract, a 2-minute chart, 3-minute chart, 5-minute chart, or a 1-minute chart. Really just depends on what your preference is between 1 minute and 5 minutes. Some people prefer some time frames in that range other than others based on maybe some other indicators that they may be using to help confirm their entries as well. In this case, with our daily key level strategy, we're just using two indicators, the daily key levels indicator for closes above and closes below either a main key level or a contextual key level. The main key levels with this daily key levels indicator are going to be your bull bear key price level, which is abbreviated here BBKPL, which for today's session for the NQ is 27,493.50. This is going to be your level that is primarily going to be in play about 90-95% of the sessions you'll see on the opening candle. The other main key levels are your R1 through R6 levels and your above and your S1 through S6 levels below. The QL levels and the midpoint levels serve different purposes rather than taking bullish or bearish trades off of those levels, as you'll see when we go through the rest of the video. The contextual levels are going to be your PMH, PML, YDH, YDL, and YDC. So the PMH pre-market high, the PML pre-market low, YDH yesterday's daily RTH session high, YDC yesterday's RTH session daily close, and YDL is yesterday's RTH session low. With this indicator, there are two different types of trades that you can take. One is scalp-only trades. Within the scalp-only section, there are two different scalp-only trades. One is a regular scalp-only trade, which requires a one-level move in your favor for 100% exit of your contracts. The other is a micro scalp trade, which if there is a contextual level that is far enough away from the entry and that contextual level happens to occur before the one level move in your favor, then you can consider using that as a micro scalp as if you prefer a shorter trade in doing a micro scalp over a regular scalp. In today's session for the first trade here, which is a bearish trade off the 9:30 a.m. opening candle, there are no contextual levels before the S1 level. Again, the contextual levels are the YDH, YDC, YDL, PML, and PMH. In this case, they occur after in this direction of this trade rather than before the S1 level. So no micro scalp opportunities, at least on the opening trade with today's particular session. The other trade that you can do is a regular day trade. A regular day trade differs from a scalp-only trade in that it requires at least a 1.5 level move in your favor a 1.5 level move based on the level that you're basing the bullish or bearish trade on to that particular level. So in this case, a bearish trade from the BBKPL, one level for a regular scalp would be S1, whereas the minimum threshold for a regular trade is mid S1, S2. The ideal minimum move for a regular trade is a 2-level move. In this case, on a bearish trade from this level, that would be the S2 level. In regular years, you're going to, with normal volatility, you're going to see in about 80% of the sessions in a regular year, you're going to generally not get more than a 2-level move, a 2-level extension away from the BBKPL on any given day. So that would be a 2-level extension above to 2-level extension below. That is why that is called the minimum ideal move, whereas the 1.5 level is the minimum threshold move for a regular trade. A regular trade differs from a scalp-only trade also in the fact that you have several different options, as we'll get into, that you can do with a regular trade as opposed to just exiting 100% of your contracts, and that is one of the key differences between the two. Okay, so on our opening candle here, we have our 9:30 a.m. BBKPL close below alert from the daily key levels indicator. And this alert only shows if the candle is within the acceptable range. There is an acceptable range filter built into that 9:30 a.m. candle alert. The acceptable range filter is also built into other alerts if you want to turn those on as well. What that does is the acceptable range is set to a maximum of 85%. You can change that to lower than 85%. We do not recommend setting it above 85%, although you can. And what that means is that it is within the 85% percentile of a close below or above the level in question. And so that keeps it within the acceptable range for a risk reward based on the stop losses that you would be using for those particular bullish bearish trades off the specific key level compared to the reward of the at least the minimum profit threshold on a scalp. If the close below or close above is outside the acceptable range, then the alert does not fire, and there would be no alerts shown here if it was outside of the acceptable range. And then you would simply be looking for a possible trade entry off of another level besides the BBKPL. But here in today's session, we do have the close below, we have the alert firing. We're not just going to go simply on the close below, we also need to get confirmation from the ribbon indicator. What you're looking for with the ribbon indicator is you are looking for the ribbon indicator to be in confluence with either the close below bearish trade, meaning the ribbon is all red. And ideally, not only all red, but that on a bearish entry, that the lower part of the ribbon, the lower lines of the ribbon are starting to pull away from the base of the ribbon. That would be the ideal one. The minimum requirement would be that the ribbon be all red. On a bullish trade, it's going to be the opposite. On a bullish trade, on a close above a key level, then what you're looking for with confirmation with the ribbon is you're looking for the ribbon to be all green. And ideally, you would like for the top part of the ribbon to be starting to be pulling away from the base of the ribbon. But at very minimum, the ribbon has to be all green. So in either situation, you're looking for the ribbon to be all one color. If the ribbon is the opposite color of the close above or close below, then there's no trade as you have a conflict. Or if the ribbon is multicolored, part red, part green, then again, there's no trade because you have a conflict between the ribbon and the close above and or close below. So on this bearish entry here on a short, of course, you're doing it at the bid. The bid on the close of this, 27,435.50. Now we're looking for a one level move in our favor for a scalp. And at the very next candle, 9:31 a.m., we have a one level move down to the S1 level. Again, it's a one level move that is calculated not from the entry executed price, but the level that you're basing the trade on. So we're basing it on this level. The direction is down since it's bearish, so S1 is the scalp only exit on a regular scalp only. Again, there are no contextual levels today. If one of these contextual levels was, say, down in this area here, far enough away from the entry, then you could consider that as a micro scalp exit if you prefer doing micro scalps. But in this session, that is not the case. On the hit of the S1 level, that's 27,391.75, so that is a 43.75 points at $20 a point on a regular E-mini. That's $875 gross profit. Of course, that is not taken into account any possible slippage or commissions that you are paying. That would also be the same profit if you were instead trading micros, so the equivalent would be 10 NQ micros to 1 NQ regular E-mini. At 9:35, we have the hit of the mid S1, S2, that's 27,340.75. So we have the hit of that level here. As you can see, this level is in confluence with three of the contextual levels here. The YDH, the PML, and the YDC level. So it's a very important level here, as it is in confluence with these other three key levels here. So at 9:35 a.m. we have a hit of that. That is the 1.5 level minimum threshold required move for a regular trade. That's a 94.75 move in our favor. On the hit of the mid S1, S2 level, that's a profit of 94.75 points, so that's $1,895 profit per NQ E-mini contract. Now, as I mentioned earlier, the difference between the regular trade and the scalp only is you do have other options available to you on a regular trade. Scalp only trades, you're exiting 100% of your trade, and then you're looking for another trade opportunity after that if you are continuing to trade the rest of the session. On a regular trade, you have several other options. So one of the options is adjusting your stop loss on all of your contracts to break even, or break even plus a minimum profit buffer. So of course, break even would be the executed price that you paid for the bearish entry. Break even plus a profit buffer. The minimum profit buffer is somewhere between 4 ticks and 16 ticks. So 4 ticks is 1 point, 16 ticks is 4 points. Alternatively, if you wanted to be more aggressive with the profit buffer, you could move your profit buffer to the S1 level, 27,391.75. However, you do need to keep in mind that if you set your initial profit buffer too aggressively, then you do run the risk of getting stopped out a lot more than just doing a minimum one. So that's up to each trader to decide for themselves with their own risk profile. But if you're looking for a more aggressive one and just simply don't want to use a point, the most aggressive one would be just moving it down to the S1 level. And of course, lesser aggressive would be somewhere between 4 and 16 ticks up to this S1 level. Okay, so you can either exit 100% of your contracts at the 1.5 level move, just like you did with scalp, or you can keep all your contracts and adjust your stop loss to break even, or break even plus the profit buffer. The third alternative applies if you are either trading 3 or more regular E-mini contracts or 3 or more micro contracts. The third alternative is that you are exiting 60 to 90% of your contracts when it hits the 1.5 level move in your favor. And then you are collecting that profit on those 60 to 90% exit of your initial position. And then what you're doing is on the remaining runners, you are adjusting your stop loss to break even or break even plus the profit buffer. And then what you're looking for in that situation is on the remaining runners, managing those level to level at further level moves in your favor. So further level moves in your favor would be, in this case, moves that to levels that are in your favor, whether they are a contextual or a key level, that occur after the 1.5 level move in your favor. So as it moves to other key levels that occur in the pathway after the 1.5 level move, each one of those becomes an additional waypoint for a decision that to either take off some more of your runners or adjust your profit buffer to increase your profit buffer further, or do a combination of taking off some of your remaining runners as well as adjusting the stop loss to eventually you have one remaining runner left, and then deciding at a further key level move in your favor to exit your final remaining runner. At 9:40 a.m., the regular trade, we have the minimum ideal move to the S2 level. That is a 2-level move in our favor. Again, we're not calculating the 2-level move from the executed point. We are calculating it from the level that we're basing the trade, the original trade from, in this case the BBKPL. So this is a 1-level move, 1.5 level move, now a 2-level move. The 2-level ideal move, as we talked about earlier, is because of 80% of the sessions in a normal year, you're going to, with normal volatility, you're generally going to see a 2-level extension above the bull bear key price level or below the bull bear key price level, or both. But a 2-level move away from the bull bear KPL on the symbols S, ES, and NQ. So that's going to happen about 80% of the time in a normal year with normal volatility. On a 2-level move here down to the S2, 27,289.75, that is a move of 145.75 points in our favor. So that is a profit of $2,915 per E-mini contract or per 10 micros. Now, when it does hit the minimum ideal move, again, since 80% of the sessions approximately are going to be the extent of a 2-level move above or below the bull bear key price level as being the extent of the majority of the moves in 80% of the sessions, then at that point you want to start tightening up your stop losses on either if you still have your initial position or on any remaining runners, because the odds are against, because since 80% of the sessions result in a 2-level extension move away from the BBKPL in either direction, at that point, after a 2-level move, you really need to be more cautious about managing your risk on trying to get any further moves out of it. It's not that you need to exit everything at a 2-level move. It's just that you need to be aware of the fact that that's where about 80% of the sessions are generally going to end. As far as you want to think about it as a rubber band below the BBKPL and a rubber band above the BBKPL. So it's not that we can't get a move, because still 20% of the sessions result in moves that are going to be greater than that. Then what you do want to be careful of, though, is to be cautious of on any remaining contracts that you take some off at each level move in your favor, and that you are also being cautious with your stop loss by adding more of a profit buffer to tighten it up. Therefore, if you still get a further move down and we get a further stair-step move down without a big retrace move back up, then it's fine. You can keep adjusting as the price continues to move in your favor. In this case, we did see a move down to S2, S3 as an example. But you just need to be more aware of that after the two-level move in your favor. Okay, so after it bottomed out here on the mid S2, S3, as you can see here, we start getting a reversal. We start getting a close here above the second thick moving average within the moving average ribbon here. So on I'll move down, closing back above the top thick moving average here is a sign that initial sign that a reversal may be imminent. As we can see here now, the ribbon turns all green here at the 10:51 a.m. candle. Happens to coincide with the S2 key level here. So now we have a bullish trade off of the S2 level. On a bullish trade off of the S2 level, your tight stop loss is going to be the QL level below S2, whereas the standard stop loss in a bullish entry off of S2 is going to be the first midpoint below S2, which is mid S2, S3. On this initial entry here, the bearish entry on the BBKPL, the 9:30 a.m. candle, the tight stop loss was the BBKPL level of the on a bearish entry from the BBKPL level is the QL above BBKPL, whereas the standard stop loss in the bearish entry from the BBKPL is the first midpoint level above the BBKPL, this level. Okay. Here on this entry, of course, since it's a bullish entry, we're paying the ask on 10:51 a.m. Close. That ask 27,320. Now, here, these levels here, even though they do occur before the S1 level, they are simply too close to this entry to be considered for a microscalp. If these were more up in this area here, since this entry is here, then you could consider these contextual levels for a microscalp, but they are simply too close to this entry here. So again, in this case, we do have contextual levels which do occur before the scalp only exit. In this particular case, however, these are too close. So we're going to be looking for only the scalp, regular scalp only one level move. And here on this candle here at 11:01 a.m., we do get the move back up to the S1, 27,391.75. Our entry, of course, 27,320. So that's 71.75 points. That is $1,435 profit per NQ E-mini or 10 NQ micros. Okay, so here at the 1:13 p.m. we have our regular trade minimum threshold 1.5 level move. Again, this is a bullish trade from S2, so the S1 is your regular scalp only exit because that's a one level move. Mid BBKPL S1 is your 1.5 level move, and the BBKPL would be your 2 level move on a bullish trade from S2. So 1:13 p.m., 1.5 level move in our favor, 122.75 points on the hit of the mid BBKPL S1, 27,442.75. That is $2,455 profit per NQE mini or per 10 micros. Here at 1:30 p.m., we have the hit of the BBKPL level. BBKPL level, 27,493.50. 1:30 p.m., that's the 2-level minimum ideal move. Now it's 173.50 points at $20 a point. On the NQE mini, that's $3,470 profit per NQE mini or per 10 NQ micros. All right, well now we'll take a look at the S&P 500 ES chart. Okay, now we're looking at the S&P 500 ES E-mini futures chart. Same thing on the 9:30 a.m. opening candle. We have the BBKPL level bearish alert on the 9:30 a.m. opening candle here. We have the ribbon all red, and we also have the ideal all red with the lower part of the ribbon moving away from the base of the ribbon. This is within the acceptable range, which is why we're seeing the BBKPL down alert on this close below. The bid on shorting this is going to be on the candle close 71.89.75. Again, we don't have any contextual levels before the S1 level scalp, so it's only regular scalp only in this particular session. 9:34 a.m. scalp only, one level move, BBKPL down to S1, 71.92.25, so that's a 7.25 point move, 362.50 profit per ES E-mini or per 10 ES micros. 9:39 a.m. hits the minimum regular trade threshold, 1.50 level move of the mid S1, S2, 71.72.75. That is a 17-point move in our favor on the hit of that level. That's the ES is $50 a point. The NQ is 20. The ES is 50 on regular E-minis. So 17 points. It's $850 profit per ES E-mini. We also have the two-level move, just like we saw in the NQ. So that's at the 957. Two-level ideal minimum move, 71.63. So that's 26.75 points. Move in our favor, $50 a point. On the regular E-mini, $1,337.50 profit per ES E-mini, regular, or per 10 ES micros. Again, we're seeing a turnaround here, just like we saw in the NQ. Of course, the NQ went down further than this did, and the turnaround here at the time that the ribbon is all green and confluence with the close of the candle is happening at the S1 level as opposed to the S2 that we had with NQ. 10:51 a.m. we have the ribbon all green. It's pulling away. The top part is pulling away from the base, so we're getting an ideal confirmation from the ribbon, along with the close above the S1. The tight stop loss on the bullish entry S1, QL below S1, standard stop loss first midpoint below S1, mid S1, S2. On the 9:30 a.m. bearish entry, the tight stop loss is the QL above BBKPL. Standard stop loss is the first midpoint above the BBKPL bid, BBKPL 1. Of course, since this is a bullish entry, it's going to be the ask. 71.88.25 on this 10:51 a.m. candle close. There are no contextual levels before a one-level move. One-level move is from the S1, the level we're basing the trade on. Bullish trade looking up. One-level move is the BBKPL. 11:31 scalp only one-level move BBKPL. 13.50 points from our entry. $50 a point. That's $675 profit per ES regular E-mini or per 10 micros. 1:29 p.m. we have the regular trade minimum threshold move of 1.5 level move to bid BBKPL R1. So it's going to be on this 129 candle here. That's a move of 23.25 points in our favor. $50 a point, $1,162.50 profit per regular ES E-mini or per 10 micros. 1:46 p.m. right here, we have the two-level ideal move to the R1. Again, we started at S1. That's the level we're based the trade on. One level move, 1.5 level move, two level move. R1 72.21. 32.75 points, $1,637.50 profit per regular E-mini or per 10 micros. As you can see here in the case of ES, we did get a move further from that. So if you were holding on to any further remaining runners, then you had an opportunity here, make an adjustment or a partial exit of remaining runners, or both. And again, here, when you hit the R2 level. Okay, so that's going to wrap it up for today's video. If you are interested in purchasing these indicators, you can email us at daytradinggps@gmail.com to request a discount promo code, and we will send you a discount promo code for a substantial discount on your purchase of the Future CFD's Daily Key Levels V 3.0 indicator. And then also, if you want to buy the add-on Day Trading GPS ribbon indicator, this indicator, the ribbon indicator, also has a 9:30 a.m. Filter for use on indexes as well. You can also use that 9:30 a.m. filter for regular stocks, ETFs, futures, etc. The filter is primarily designed for use on indexes. However, it also can be used on stocks, ETFs, and futures, and other symbols as well. You can also do a dual screen with the ribbon. You could do a dual screen, one with the filter on and one with the filter off, if you wanted to get a double confirmation on the ribbon by using two different ribbons, one with the filter on and one with the filter off. Okay, so what we'd like to show you now is, if you're wondering, well, how are these indicators working for other people who have previously purchased them, we're now going to show you some of the feedback and reviews that we've received from traders who have purchased and used our daily key levels indicators for futures as well as SPX and other symbols. Thank you for taking the time for watching this video today. Again, if you are interested, you can request a discount promo code by sending an email at daytradinggps@gmail.com to request a discount promo code. If you did like the video, we'd appreciate it if you'd hit the like button, as that helps us with the YouTube algorithm. If you'd like to be notified of any future videos that we post on any trade topics or on any of our daily key levels indicators, please hit the subscribe button and you'll be notified of any additional videos when we post them. Thank you again for watching today's video, and we wish you much prosperity in all your future trading. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you.